Yeah, let me pull it up in a couple seconds here. Okay, and we are live. Guys, welcome to Wolf Web 3. I'm Cade. We got A Trades Crypto in the house, baby. How's it going, man?
That's good, brother. I'm going good. How are you?
Doing well, doing well. So, guys, we are happy to have you here. If you could just take a second and repost the stream on whichever stream you're on. There's like 6 of them running right now. There's Charles's LinkedIn is hooked up to this thing. Wolf has video stream going. I've got it going. Ace got it going on his Twitter. So we got it all over the platform. If you don't mind hitting the repost button, letting people know that we're live. I'm going to take the position of a beginner trader. I wouldn't say like total beginner. I had to spend about a year on the charts, but nowhere near enough experience trading and making trades and entering things and marking up charts that I needed to. So A was like, yo, I'm a pro trader. Let's teach the people. Let's talk about how we go about the charts. So we're going to pull up some charts and see if we can't learn some stuff together. Hopefully over the next, however long we end up running this, I learned some stuff and we make some money along the way. So yeah, man, we're gonna pull some charts and it's gonna sort of take us through it.
Cool. So for today's segment, really just going to go down the basics on how I got started. And you really want to start with the basics of RSI, MACD, and you definitely want to throw a moving average in there. And the moving average that I always suggest to throw in would be 10 EMA. So before I go into how to use them, let's talk about a little bit of what they are first. So RSI would be this. Here, let me leave these on so you can see. This is RSI right here. So RSI essentially is a relative strength index, and it's an indicator that measures essentially the speed and size of price in a stock and other assets. It basically tells you if the stock is oversold or overbought. So an example of, let me see, pull this up. So an example of a stock that would be oversold would be when it reaches under the 30 level. Anything under 30 is severely oversold, and you typically have the best entry if you have conviction with the chart. And just because the stock is in this territory doesn't mean it's going to bounce, but it would be a better area to enter risk versus reward than entering an area that is more on the overbought side. So as we get past 70 would be like, you probably don't want to enter any type of trades unless, we're in a bull trend, but we'll get to when you would enter and look at different time frames to feel like you are appropriate to enter in this area. And just for today's segment, what's up?
Where does that stack like on the indicators where you're like, okay, this is the top indicator that I'm looking for, or is just like third or fourth in line? Is it like something that you look for an extra confirmation, or is this like the top one you look for?
It's man, that's so little hard to explain, I guess, just because this isn't actually my my trade setup. Remember, I use RSI, but it's like advanced RSI, MACD. I use advanced MACD. So this is how I started trading, though. But that is a good question, bro. I guess we'll be able to answer it as I dive into the rest of these. But save that question for the end. Don't forget it, okay?
Yes, sir.
But just real quick. So back to RSI, I wanted to show you real quick. This would be like you got to have some steel here to really have conviction to enter the chart, because anything past 70 is definitely overbought. 80, dangerous. 87, super dangerous. You can see every time we've entered that zone, it's retraced back down. So when you see RSI over here in this overbought way past the 70, you definitely need to pump the brakes and assess your risk versus reward, control your FOMO, because when I see this on the chart on the daily, I'm just hanging out until we see it jump back into at least over here. And the middle of RSI would be 50. So you have your oversold at 30, the middle of RSI 50, and then 70 would be overbought. And that kind of gauge, as you can see. So one second, let me make this bigger for everyone. So as you can see, when Bitcoin is in this area, price action continues with the RSI, follows almost perfectly, and it almost lines up with a peak. So you can kind of tell we're peaking for a move on the daily time frame when this hard move. I mean, look at the amount of candles. Oh, I forgot one. Or we'll do that next week. I'll add volume next week. So every week we'll add different indicators. I feel like this is enough right now.
Yep.
So for example, Bitcoin right here, overbought. It's still pushing, overbought, coming down on RSI, and then you see the drop here, and then just sideways movement. So in this area Here, you really need to use other indicators to gauge if it's appropriate to enter. And then that's when you can come and look at your MACD. You can look at your 10-day moving average. And for example, significance of the 10-day moving average is basically helps you know the trend in the chart itself. It's the trading within 10 days. So for example, if I was to change my moving average length to 20, you'll see the moving average line move. And that's essentially the movement of the chart within a 20-day period. But I prefer 10 for the daily to kind of get confirmation if the chart is bullish. So you'll see it a little tighter to the candles. For example, on this whole move here, you can tell the whole move itself was bullish. 1 second, sorry. So as you see the candles above 10 EMA, the move itself is bullish. You never want to trade within the candle being underneath 10 EMA. You always want to wait to enter right when you can retest the EMA and possibly get above it. Because you can see right here, it was fell out of the EMA, got bearish. It went from 44 to 38 and then started the uptrend right at 10 EMA and finally got above it, and it stayed above it, stayed above it, stayed above it. With between this and RSI, you would have known the move was bullish enough to stay in the trade on the daily time frame. But around this period, you probably need to assess if it's going to break underneath and come retest these lower levels, which it did. And yeah, 10 EMA is essentially just a trend line for getting in and out of trades. A lot of day traders will use 10 EMA to enter, exit. As you can see, after we exited it on the daily time frame, making its way back up, it kind of just struggles and trades around it. But 10 EMA is my favorite to use as a bullish indicator. So as we go down these segments, I'll say the significance of 10 EMA, 20 EMA, 50 EMA, 100, 200, and I found out people use 800 EMA. Shout out to my girl leaders.
Hey.
Yeah, so EMAs essentially tell you the bullishness within a time period. So that would be a moving average. And then the last thing we'll be talking about, and then I'll show you how this kind of flows together in the charts and how you can use these 3 indicators to essentially trade. I mean, it's a lot more complex than just using 3 indicators, but you have to start somewhere. And this is where I started. This is where I learned. And muscle memory would be the next suggestion. As you get used to your indicators, just like every week we'll add a different one, you get that muscle memory with the candle print and understanding what they kind of mean together and getting confluence. And I'll show you how I use all 3 together here in a bit. And the last indicator that we'll be using today is the moving average, MACD, which is essentially identity for price trends and market entry points and buying, selling. And with MACD, I'm going to zoom in real quick. With MACD, you'll have your signal line and you'll have your trend line. So the signal line and trend line crossing essentially are what would create the colors of MACD. And you can customize this just like anything, but I'll get into that like way down. So there are features you can do with MACD to kind of tailor the time frames, but for now we'll leave it like this and go from there. But the blue line is essentially the difference between the 12-day and the 26-day EMA. So within MACD, there is moving averages, and the red line is the signal line, which is a 9-day EMA. So them crossing essentially create the MACD. And as we get more down the series, I'll teach you how to add multiple moving averages to your chart, how you can add 10 with 20, you can add 10 with 50, 20 with 50, 50 with 100, and they all mean different things. And a lot of people like to throw the 10, the 20, the 50, and 100 on their charts. And the way they cross tells you a lot about the price action of the chart itself. So that's definitely a little more complex. So it's first step would be getting used to seeing the 10-day moving average on your chart, getting used to working with MACD and RSI, all 3 together. So we'll get to there. You have any questions, Cade? Because you're a beginner. Does this make sense, Cade?
Yeah, it's making sense. I think you're right though. Like the majority of traders I think fall flat when they look at something and they're like, well, that doesn't make sense. I'm going to check out. And you're like, well, if you sit with this and are looking at the chart enough over the next few months,
Muscle memory.
things
Yep.
will start to click in. So exactly what you said, I agree with that.
So,
And also,
for
like one thing
example,
that I noticed before you even move on with the chart side of things, you know, like for traders who are like, I made 7 trades and I lost already. It's like, you know, one thing that I learned very early on when I was getting into it was the risk reward. Like you can make 7 trades that lose, but if your risk reward ratios are set correctly, you can still win and be profitable at the end of the month off 3 or 4 trades, even though you lost more. And so I just don't want to. I don't want anyone to like feel a crestfallen because they made a few bad trades, or they're like, you know, I followed this indicator and it led me down astray one time. It's really about that long term.
yeah, I'm actually rereading a book right now about like the mental side of trading, and the worst
Mm,
thing you can do is not being able to identify the mistakes you make. And rereading this book really helped me like refine my mistakes. And my mistakes is, I'm overconfident, I overtrade, and I don't know how to walk away when I'm up big. So right now, those are my 3
mm.
things as a trader that I'm going to refine. And being a profitable trader is not as hard as you make it out to seem. It's just a matter of discipline. So that's what I'm working on myself. I've gotten very
What's that
cocky,
book called?
and what's up?
What's that book called?
It is called, let me see. Sorry, my brain is fried. It's
You're good.
The Mental Game of Trading. So it's about 300
Mm,
pages. It's, bro, one of the best books that I've ever read. So after this, I was at the beach earlier reading it. I take notes on it. Let me show you just I'll actually talk to you personally, but I take notes on it. It helps you identify a lot of things that go wrong with, on the emotional side of trading that you don't really take into factor because it's like all unconscious. Like when you enter a trade and you lose, you should probably step away, understand what went wrong, assess the situation instead of getting mad and re-entering a trade. And little things like that I have realized that I'm like, something's going wrong with my W's that I'm getting, and I want to keep the W's. So biggest thing is discipline in the mental side. Once you reach to that like level, first you got to know the technical side and then control the emotional side. That's what I suggest.
mm,
But I mean, it's a great book to read, and the lessons on there definitely are cool, bro. You'll like it. I'll send you the book, the exact one.
sweet. Thank you.
Yeah. But going back to Bitcoin on the daily, so let's try to use this all together so we can kind of see how the bigger picture is here. Alrighty. So for example, right here at this point, we would have had the candles on the daily. So this was June. We were bullish. And then June 6th, you can see right here, it's this big red candle. It's
Mm,
retesting. And by retesting, I mean it's right on it, either retesting the line, retesting support resistance. And we'll get to next week as support resistance, where I show you how to add those lines so you can physically see. So we'll do that's going to be killer with this. So for today, we'll definitely focus on these 3. Next week, support resistance. The following week, we can maybe add EMAs. The following week, I can add my special indicators. And then after, 4 weeks of everyone just seeing this on their charts, using it, we'll just refine it and keep doing it
yeah.
until you guys really, really get the point of it. And you get the point of it by watching someone who knows what they're doing, talking about the charts or entering the trades. So I think,
We
this is
we
really
can do
going
a
to help a
stream
lot.
where I like you walk me through setting it up and I can manually
Mhm.
put them on. That way someone can follow along.
Yes, bro. So you being almost like, not saying you're a beginner, but you being like
Well,
even
I'm a
like
beginner, bro.
moderate trader. You said you're a
I'll
beginner.
call myself.
You
I'll
said
call myself a beginner.
I love you, Kate.
I'm not
You're
like
so
roll
modest.
into the classroom, never heard of a chart. Like I can look at one, and not panic, and I understand some of the concepts, but I have not taken enough trades to call myself anything but a beginner.
Yeah, yeah, I love it, man. But no, you're perfect, bro. Me and you, so me being the expert and you being the beginner is really going to help the beginners really ask. You're going to ask the questions that need to be asked, and feel free, Kate, to ask questions that don't make sense to you, because these are probably a lot of questions that I'm missing, and that makes sense to the average, or that don't make sense to the person that hasn't seen a chart. Because I'm trying to rewind, essentially go backwards and like go from square
Yeah.
one. I feel like I'm doing okay, but we're gonna get this going, guys. We're gonna get some people to pro action by a few weeks.
Let's go.
But using all these indicators together, guys, I want to show you, for example, we would have been bullish here in this June up until June 7th, and you can see red candle retested on it. But right here, as you get more comfortable, there's a whole segment I think that I need to do on just candle prints, but that's probably down the block, and that you
Mhm.
need to have muscle memory. So you need to look at this because candle prints all are muscle memory unless you physically Google the candle prints and look it up. But there's an easier way, and I learned just by looking at the charts. So if you really just spend time just having the screen open while you're watching TV, I know it sounds crazy, and this is literally what I did. You'll become really good and familiar with like the candles and using all three together. But here we go. We had broken this bullish 10 EMA. So anything under EMA is going to be considered bearish. Anything above the 10, the white line, is going to be considered bullish. So this whole move, bullish, bullish, you could have stayed in this entire move, risked it for the biscuit, thinking going to go higher because we're still on top of the line. But as you got this big pump, this candle here, you might have wanted to, okay, maybe we get another one right here. As you see it kind of skidding up and down on the line, you want to be cautious because remember, the 10 EMA on the daily is going to essentially direct the price action going forward, at least for a few days, because you can see it was bullish for, we'll consider this May 13th up into June 7th, and then from there it lost it on the daily time frame. So that you can see on the charts. So from May 7th, you can see that MACD or that RSI was even curving up a little bit. So the curves on MACD or on RSI are going to be important to tell you direction. So obviously a
Mm.
curve down, you're going to want to be cautious, but as soon as you start to see a curve up like this, you want to go back. I always zoom in on my indicators. You see the curve up and you kind of want to see if it's possible for this chart to go on a little uptrend from there. When MACD is, or when RSI, I keep saying that, when RSI is anything below 50 to 30 is, where I typically like to end. This is like enter the trade on the daily. This is be cautious on the trade in the daily. For right now, as a new trader, I would focus on entering when RSI is in this territory because it means it's you have more chance of being successful in the trade the closer you are to entering on the bottom. As you can see, every time on the RSI indicator it's been on the bottom, you would have got great price action leading to the top. Whereas not every single time you would have entered right here, you would have been scared right here because a lot of trading is controlling your emotions, being able to handle. This is what the book teaches you, honestly. It teaches you discipline with what you're trading and the confidence, because if you see a big move down, but, there's potential to go up, you would have caught the potential with another indicator. So that's why you can't just rely on one. You need to get confluence on a lot of indicators. My chart has 12 that I use on my personal chart. So I know that's a lot, but I trade based off price action. I mean, we use Fibonacci. There's a bunch of ways to trade. So I'm teaching you how to trade off price action and indicators.
I think the way I learned was smart money, institutional candles, and following. I think it's a
Yes.
similar nature.
Price action, bro. Price action is a similar nature. So I want to add probably actually next week. That's the indicator because I don't use regular volume bars. I want to add my whale indicator, and there's a free
Mm.
version of it. So there's a free version of my whale indicator. The only difference is it's a little slower and it doesn't give you like the percents. You just get like the generic color candles, but it does the job better than, in my opinion, the candles. But no, it's good, man. So we'll
Cool.
get to volume next week and support and resistance, and then that would be EMA. Or that'd be 5 indicators, and then that I think we'll really refine for a few or 2 weeks, and then we continue adding. So it'll be
So
fun. So for example, let's look back at here. Let's use all three of the indicators together to kind of get the bigger picture. So for this indicator, we'll find when RSI was at the bottom. Not too bottom. We can trade. We'll go back to this April area. So April, you would have been scared. Just looking like this. This looks scary as a trader. This looks scary if you have no indicators. Then you got the peak move right here in March, and right here, all faith was lost in March on May 1st. Was it not? I remember this. This is almost as bad sentiment as September
yep.
first. Right here, everyone thought we were revisiting lower 50s. Little did they know we were going to revisit that in a few months.
Yeah.
But when you can't see price action and you just use candles, it gets scary. But this candle wick, when you see wicks on a candle, typically that's bullish. I don't want to go too far into it, but a wick on the bottom with the body candle with it full on the top is bullish. And a wick on the top with the body on the bottom is bearish. That's all I'm gonna say about the candle prints and the bullishness and bearishness. Does that make sense, Cade?
It makes sense, and to add on to that, I'm pretty sure the reasoning behind that is because people, at least this is what I understood, is the institutional
Buyers
candle. They're like,
show
we're gonna
up.
push it down,
Yep. Look
we're
at.
gonna get everyone out of
Yep.
their position, we're gonna buy up the candle, and then we're gonna ride it back up.
Yep. So for example,
Manipulating all of us.
exactly. So we'll talk about the wicks then, because candles. Hopefully, this will get people interested to like continue to look at it. So, for example, you see these wicks here, wicks, wicks, wicks. This was a good one, but still went down. And then you start to see a bunch of wicks. When I start to see a bunch of wicks on the bottom, I start to already
Mm,
know they're buying. So that's what I'm trying to say, Kate. The wicks and the candles and the bodies are all very important. So I said I wasn't going to go into this, but we'll talk about wicks. We're not talking about candles or patterns yet. So I just want everyone to understand the importance of when you see a lot of these wicks at the bottom on the daily, something's cooking. Something's cooking. Just like when you see a lot of wicks on the, let's look at a nice downtrend. So for example, look at the body, wicks on the top, wicks on the top, and it's confusing because, on the downtrend, you'll get wicks at the bottom and top because typically it's bulls and bears fighting each other. You'll see that lot prevalent on the daily chart with wicks at bottom and top. Whereas when you're going to start the hard move on up, the buyers always are going to be overtaking the bears to push the price up. So you'll see the wicks a little bit bigger here. So we'll get into that in another segment, but that's kind of the gist of it. Watch out for the wicks, and bullish wicks are a thing. So we'll go back to this April period. So when hope was lost right here, where am I? Or May 1st, I think I was looking at, right? Want to look. Yeah, so
you were
May
looking around.
1st, we'll look. May 1st, we'll look at this. So I like to make I'm blind. So that's why I'm like looking in because I'm using my laptop for this because it's faster than my desktop.
Mm,
But right here on May 1st, you would have probably wanted to, be ready for an uptrend because I got three things that give me confluence with these three indicators. So we already fell off here and it retested the 10 EMA to try to get bullish, fell down again. When you see the retest of the constant 10 EMA, you should already start looking at other indicators to see if it's possible to start the uptrend because that means you can physically just use that as the bulls and the bears are fighting. So in like this period, the bears are just wrecking them. So you probably don't want to enter. And the curving of the line, if the 10 EMA is starting to curve up, the price action curves up. So candles, 10 EMA curves down, candles are essentially coming down. So when you start to see the 10 EMA go up like this, it's represented by the price itself going up like this. So back to this period right here on May 1st, we fell way out of the 10 EMA, retest definitely coming. You're looking at your RSI. Let's zoom in. So everyone right here, May, RSI on that lower level, this is it's at 30. So only 3 away from entering very oversold area, and a very oversold area just looks just like a very overbought area. Typically, the closer you get to this area, underneath it, especially here, nothing stays in this area forever. So I would have entered a long position here. I would have waited for a better short position in this area. So I only short and long Bitcoin in periods of this and this. That's the only time I'll enter a huge, huge short position. I'll never enter it when we're in these periods. And I guess it's a little different because I use a different RSI that shows me a little bit differently, but this is how you would have entered a long-term trade, just using RSI, honestly, because if this is here and then we officially look, you see the yellow line, once it crosses it, typically it's going to go on a hard run. So when we go back to that May period, I just wanted to show you what really oversold looks like, really overbought looks like. Does that make sense, Cade?
Yeah, it makes sense. It's pretty simple to follow too.
Yeah. Not the most complex, but back to this area, as you can see, we went from overbought, and typically I like to see this area go as close as possible to this area because it always retraces. And a move that retraces to oversold is minimally going to retest this area. And if we get here, we're going to get close to here, but better to just watch it enter this area and then just probably exit the trade or just ride out the volatility, because what reaches overbought always gets oversold. What reaches oversold typically always goes into the higher area of overbought. So back to this May period, we would have been falling, and this hard move up here would have honestly alerted me that we're probably going to start the uptrend. So with this hard move up, I would have seen all these body candles right here at crossing the 10 EMA. Do you see? Hold on, let me zoom it up. So right here, when it crossed the 10 EMA, the move was bullish, and you can see what it did on RSI as well. So cross the 10 EMA right here, and on RSI levels, it would have been right at the signal line. So it would have been right here. It crossed, and the move crossed it as well on the 10 EMA, instantly telling me it's going to go on a nice little run. And then you look at MACD right here. Dark red on MACD, obviously not good. Big dark red bars, not good. And so the order of how you want to see your MACD from bad to good, it would be big dark red, not good, little dark red, not good, light red, and then you should see a little dark green, big dark green. So anything dark is going to be either very bad, very good. So dark area, and then obviously red dark was the down of the move. And right here at that transition of dark red to light red, between this transition, between this uptrend on RSI and between crossing the 10 EMA, I would have felt comfortable that this thing was going to start an uptrend on the daily time. And as you can see, MACD is getting smaller, and it's on to the last little light red here, and then it switched over to dark green. So the dark green bars itself are small, so you want to zoom in. So on this print here, it's small print, but I would have felt comfortable still in this right here because it was in red so long. So typically you're not going to see the MACD just stay in red forever, even in a bear market. You get the little bursts of like these dark and dark green. Does that make sense?
Yeah, it makes sense.
So this heavy area of red and light red MACD is a lot. So I would have right here understood that potential for this move to go higher. So potential, you lost 10 EMA here. So if you look at the line and then look at the line that's going vertical, look at the candle, look at 10 EMA, look at where RSI is, and then look at MACD. So right here, RSI is curving down. It's still above 10 EMA. MACD's red, so I would have felt okay, comfortable, because just because RSI is curving down doesn't necessarily mean it's going to go down. You see the movements of it on the chart. So that's why you need to really understand everything, at least these three for now together, to get the confluence on if the chart has possibility to go higher, if it's going to go lower. So you really need to just understand the fundamentals of these three indicators. And then once you start really being able to get the muscle memory of the candles, the adding the volume and adding a few more, that's how you really just become a great trader. So right here I just want to talk about this move real quick, Kate. Sorry if I'm boring you.
Nope.
So good, right bro. Here, we're still on this May 1st move that had, underneath 10 EMA, red candles. We were curving down, MACD's printing big, and then, we saw the potential reversal here with reversal going up. We're heading above this white line, and then we see the MACD go from the worst to light red, which is still bad, and then we finally made our way into the green. So good. So confluence is the best thing you can get is when all three of these indicators look great or all three look bad. When you got 2 versus 1, that's when you have to use critical thinking and really use the fundamentals of the time period that you're in and look outside technicals. Because if it's, for example, in this period right here, we would have had, this is check. MACD looks good. We're still above 10 EMA, but we're curving down on RSI. So the curve down itself is not what you want to see. But then you have to critically think of the possibility of RSI bouncing and making its way up. And for me, it would have been worth it based off of MACD still being green, still being close to the 10 EMA, because you can see the farther away, the redder this prints. So the fact
Mm,
that we're close to the 10 EMA, even though we fell outside of the 10 EMA, it's still essentially the body is still on it. So the move isn't necessarily lost. And you would use this and this to kind of have hope and critically think if you it's worth it to stay in or not. So, for example, the red body printed and RSI is coming down, and we're down to our last little light green. At this point right here in this day, we're still far away from the 10 EMA, so the move is bearish, but the candle turned from red. We got a green candle, so it's fighting, and right here we see RSI curving up. That curve up would have told me to hold the position and bet that we go back above 10 EMA, because with the 10 EMA, it's going to be tight to the candles, but so you have to use the other two indicators to kind of guesstimate if the move has potential to go back above it. So me seeing this right here, seeing this candle, seeing RSI curve back up, and then especially seeing this flip to red and seeing, even though this is a tiny, tiny little green, green is green in my book. So this move and this green would have alerted me that this move has potential, especially when RSI is only in the middle. In the middle means for me of RSI that we're either going to go down or up. And this is once again why critical thinking when you're trading is going to be vital, because as a critical thinker, I would have at least, I can't remember what May that period was, but just knowing the downtrend that we did from all-time high to April, the uptrend from here, I would have at least thought there was a good move coming to remain inside. And the good move did come from this print right here. The next one was a big print, and I would have stayed in right here just based off of MACD and based off of the print and based off of where RSI is at. Nowhere near the oversold or overbought area. We're barely making our way there. As you can see, it would have been at like 49. Overbought is at 70. So this move has a lot of potential based off of RSI. RSI, the only things that really matter from it is if it's too high or too low, then that's the simplest way for you to understand how to use RSI. You don't really have to get too complex and worried about, oh, it's coming down, oh, it's coming up. Just honestly look at the areas it's in from 70 to 50, it's oversold. So if it's in this area, the move has potential to go into the over. If it's in overbought, it has potential to go into oversold. So when you're in this area, you need to be cautious. When you're in this area, you need to, or you just need to have confidence. And that's why on this day, even though the price was right here at the, or even though the candles were outside the 10 EMA, we were barely at 50.49 RSI, which means the room has a lot of room to go up into the overbought territory. So critically knowing how RSI works, I would have understood that it has possibility to go into this area, which it did. And it came very close to going to 70. And, right here, especially seeing the move down, you need to just reevaluate where you are in your position, and especially seeing going to MACD, you would have seen from that little print that would have gave me confidence to stay in on May 17th. And that little bar right here gave me confidence. And, MACD on the daily will switch from dark green to light green to bigger dark green. So all that matters when MACD starts a print is that it's starting the print. So my rule of thumb for MACD, by no means this is accurate, means if the print prints twice, we typically get a third and the trend is set. So if it prints one, you have one print like this did to flip out of it. So I would have really watched this day. So if MACD would have printed red, for me, the trend would have been set, and I just would have watched it for a few days on the daily time frame. But as you can see, MACD did the one red, this was a critical MACD period for it. So it printed the green. So that would have told me that this right here was essentially like a bull trap, and that, you know, they really didn't want you to enjoy the rest of the move. And this little print, I instantly would have been excited for the next few days for these prints. So when you get these prints, does that make sense, Cade?
Yeah, it makes sense. Makes a lot of sense.
Cool.
And it's the same. It goes the same for shorting or buying. You know, like the exact same thing. You just have to have the right platform to be able to short it if you want. That's why it's important. Because I'm like, it doesn't really matter what kind of market we're in. I think the worst part about a lot of the not the worst part, but it's a bad way to say it, but a lot of the crypto traders only get in when there's an opportunity to buy in for a pump.
Yeah.
And I'm like, well, you can do the exact same thing if you're just like, I don't know, like if you just need the platform to be able to short. Not every platform offers the ability to short, but it's the same concept.
Exactly. Same concept, bro. Same concept. Wait till we start going to add the other indicators, and then it's just like I said, confluence and confidence with your indicators is really what matters. I can't give you the confidence. You have to go out there and practice. Everything is like riding a bike. You can't expect to get good if you don't ride the bike. And for trading view and charts, can't expect to get good if you're not looking at the price action, the movements, and it physically happening with the indicators. And that's how you build the confidence. When you know, for example, if you're just watching the charts and you're not trading, but you have these three on and you're looking at it right here, you got to ask yourself, you got to start testing yourself right here.
Yep.
You would have seen even on the April 17th, or we'll stick to this area. We'll stick to the May area actually. So hold on, I want to make these bigger, a little bit bigger. So you would have asked yourself, even if you're not trading, okay, is this print the biggest one that's going to print, or is it going to get bigger on this day? And, you know, I would have been like, okay, maybe it is going to print big. And if I'm wrong and I saw the light, smaller print, I'm like, whoa, this move has potential now. So if you're more of a cautious trader, you could have entered when you got the green print and just follow the trend, you know, RSI. And this is when you really have to critically think and use your own knowledge to understand if the move is going to continue coming down, and if you think it has possibility to go up. I think right here would have been enough for me to enter, because we already broke, we retested once to get above 10 EMA, but look at the difference from retesting this area and this area, and I'll show you. So this is what confluence with the indicators, what I mean by that. Confluence means that everything is telling you yes. So if all three line up, typically you got confluence to the positive side. Or if all three don't, you have confluence to the bad side. That should tell you to pump the brakes or start the brakes. So this is what the book actually, the confluence and, you know, fighting against the trend and fighting against your indicators is how you lose money. So rushing into a trade, being impatient, knowing that the direction isn't going to go that way, but hopium, you know, FOMO, like that's all things, if you can control, will make you a successful trader. So for example, this period right here, you would have seen like, oh, hell yeah, like this got potential right here. It's light. Oh, you would have entered here like, oh, let's go. It's going to flip into dark green. And it could have. Sometimes I do risk it, but that's just how I am as a trader. Sometimes I do get in when I see this little bar, and it does bite you in the ass because you could have just waited for a green confirmation. But entering here would have been more lucrative than entering at the green. For example, if you enter here or here, you would have risked it. But this is all that I don't want to talk about risk and trading yet, you know. Let's just focus on the concrete evidence. So right here, this period looks very similar to this period, right? So this right here, we're above 10 EMA. We are at about 49 right in the middle, and it's little. These crossing here, you would have want to seen the blue line cross through. So you would have want to seen the blue line cross through, man. Where is that at? Okay, right. This is the period we're talking about. So you see the blue line crossing through is what blue going above the red line, what makes the MACD flip. So right here, so if you don't want to look at that, you can look at lines. So right here, you had hope, and then this is where you lost it, man. Right here, so it flips back to red. Whereas in this period, you see it go straight up. You can almost see that. So the lines itself, it's important to zoom in because you might think it's going to go, but it would have told you right here that you still probably should
Mm,
wait until it's a little bit closer. Should have waited
yeah.
till it was right there to get confirmation that it really can cross. Again, right here, fake out. MACD was going to
Wow.
give it to you and then fake
That was
out. It went
close.
back down. So you really, really want to zoom in on the lines on MACD. I used to, but my MACD is a little different, so I don't need to. But the zooming into the lines is a killer pro tip that I didn't know up until years down. I would have entered right here, but if you would have looked at the lines, it was never going to cross. It was never going to
Hmm.
cross. You could have seen that this wasn't a good move to enter on compared to it going vertical on here. You get what I'm saying?
Hmm. Makes sense.
Cool. Yeah, yeah. So back to that period real quick. Where is it? I just want to compare these two. This is the last thing, and then we can probably wrap up. I think we went
Sure.
through a lot, give people time to digest it. And then I
Yeah.
actually let you do like Q&A, bro. Since you're the learner, I think, we got 665 people in here. Look, guys, looks like everyone's enjoying this. Smash the retweet button for me and Wolf Financials. Get this out there. This is definitely some alpha, and we'll do this every week. So
Yes.
for example, this period right here, I just want to compare with the period that did go bullish. So we have above the line, the period right here, we're above the line, but look at the candle. The candle itself at this period compared to this small MACD, red and green. So candles are important. You can get a little bit more confidence. So confluence with four things, I guess, because the candles are, part of the confluence and everything. So check. This period did not check the candle off. This period check the candle period off. Okay, so going back to here, we're above 10 EMA here. So we have 1 for 1 here. And this period, we're above 10 EMA. We have 2 for 2 confluence with the indicators. And then this period here, RSI is right in the middle. So I'm going to give it to it. So 2 to 3. And here we have right in the middle, 3 to 3. And MACD itself right here, I would have zoomed in and saw, nope, I would have instantly, with the candle being red, with not seeing it get close enough to crossing, and it would have alerted me that you should probably, because on the daily time frame, it moves slow. It's not like a 4 hour that
Yeah.
you can see cross right away. On the daily, it would have been lost already leading into the close. You would have seen this. So that's why this candle was red, and especially this one was red. So if you just wait to get into a daily trade for a longer term position when this is about to cross, you would have realized that this period here was not this period here. You would have seen the cross. You see it almost confidently. This would have been like the end of the day, and you're not going to see that type of fake out. So I would have felt essentially a little more comfortable entering here and risk versus reward than entering and staying here. You would have had to stomach the volatility here. Here, the volatility remained on the 10 EMA. And another pro tip is the distance between the candles and the 10 EMA, even though we crossed above and we're bullish, as long as it's on it, I'm okay with it. I'm okay with staying in a trade on the 10 EMA because this is a tight line. Remember, I want to show you one more thing, the difference between 10 and 20, and then I'll go into the importance. So you could see 20 is a little bit looser, and the candles are a little bit, it's a little different. So I'll go into that, like I said, next week. We don't want to confuse people. So that's a little segment today. Any
Let's
questions,
go.
Cade?
Yeah. So on those indicators that you have pulled up, I imagine they're all relatively customizable, like the blue line versus the orange line down there by the MACD. And so blue
Yeah.
line is today's versus the movie averages of before.
Blue line, here I could show you on the settings. It tells you. So blue line is essentially like it's, for example, fast length and slow length. So it's a 12 EMA with a 26, and this is just like a 9. So it's a time period, and this one is a straight EMA, if that makes sense. Did I explain
Mm,
that right? Because you can change the time period. Because like, look, you're gonna look at the MACD. So we can do like 16, and let's say you want to do like 32, and this is how you tailor it to different time frames. That's gonna be a baller once everyone understands how to use this, I will show you how to tailor it to, the daily, the weekly, the monthly,
Mm,
and the 4 hour. Because I don't think I need to teach people how to go DJ mode with the 1 hour. So those are probably the
right.
4 timeframes we're going to teach you. The daily is important to kind of see how the weekly, the monthly is going to play out. The 4 hour is important because it gives you the daily, it gives you the whole day, because the day time frame is not about the day. This is about setting up a long your position. It actually should give you outlook on how you think the week is going to look. And the 4 hour time frame gives you the look within the day. So that's how you actually trade within the day. And then the month and the weekly will give you kind of the outlook on that month, whereas the monthly time frame will give you the outlook on like the year, if that makes sense. Does that make sense?
It
So
does.
the
Yeah.
time frame, the day, the best indicator to day trade. I mean, you can, but the 4 hour time frame is going to be better for those short to mid swings. The days is going to be how you set up like a long position. A day and a week are how you set up long positions, and then you only really need the monthly for setups on like bear market type targets, and it's still good to look at, but yeah, the three important ones is 4 hour, daily, and weekly. And I'm kind of showing you backwards because if I was zoomed in on the 4 hour time frame, here, let's look real quick. It gets probably a little confusing because you see too much crossing. And before you can see that type of speed and crossing, you need to understand how to use the indicators. Does that make sense? Because
Yeah,
you
it
can
makes
see
perfect
this.
sense.
This looks crazy. And we'll add, like I said, like I want to add a lot of indicators. Probably like 6 in here. But yeah, you could see like right here from a trading perspective, we'll just give a quick little right here. The 4 hour was lost. And this candle right here, red flag or green flag, because RSI is way out of the oversold area. But the only thing that would have been like is like MACD is still printing big, and then as you can see here, but you would have got these light bars on the 4 hour time frame, and you would have been like, oh, okay, you would have seen it way over here, and you would have been like, okay, maybe it's worth it to enter. But remember, you really just want to wait for this MACD to give you confirmation of green. But I don't want to go too complicated with the 4 hour time frame because that'll confuse the shit out of people. But we'll add on to the daily time frame. And then once we're like fully set with the daily time frame, like we got the setup, everything's looking good, we'll start to zoom in to the 4 hour time frame, and then we'll zoom out to the weekly. I think that's the best way. Or maybe we do the weekly and then the 4 hour. But either way, those are the three indicators we're gonna work with. It looks like, had a good first session. I wasn't sure how this is gonna be, or if I was gonna be able to really teach some people, but it seemed like it went good. Did you learn a lot,
I
Kate?
learned. I definitely learned. I can't speak for anyone else other than me because I have a bit of background information and knowledge on trading. So for me, it makes perfect sense. This is like the exact thing I needed, I think, because I understand the words you're already using and how they fit into trading.
Nice.
And
So
I feel
you
like
probably did learn a lot.
person, I learned a ton. If you're super new and you have no idea anything, just stick with it because we're gonna keep going and like the words
Yeah,
are
if
starting
you're
to make
super
sense.
new, you need to put this on your chart. You need to look at the charts. You need to look at this, leave the screen up, watch some TV, even do some research into it.
Yeah,
Like if I'm a visual person, so I don't really need to do the research on like what it means because in my mind, I just put it together. But some people need to actually understand like what this is instead of me just like, showing you how to use it. You might need to do a little bit of research to really grasp that concept because not everyone is going to learn the same. Like I'm a visual learner, so I don't need to see the context of the definitions of what this means to put this into play. Does that make sense, Cade?
yeah, it makes sense. And for anyone who's listening, if you have any questions, we're gonna wrap up here in a minute. But if you can drop them down if you have any. But no,
Nice. We
this makes
finished
a lot
off
of
with
sense.
almost 1,000, man.
Let's get it. Let's
Almost a
get it.
thousand
Also, there
live.
was
That's lit.
the question I had asked in the beginning. I think you more or less answered it with the what's the word I'm looking for? Not it's not convergence. What's the word I'm looking for?
Confluence.
Confluence. Yeah. I think you pretty much answered it because I was like, where does RSI fit in the indicator list, tier list? And you kind of answer with the confluence. You're looking for the confirmation
Yep.
across the board. Sometimes the answer is
Yep.
not to jump into the trade, especially if you're not experienced. The answer might just be
Yeah.
to wait until there's a better entry, and you do get all three. And until then,
Yeah.
like that's a trade, in my opinion, is
Yeah,
choosing to
and
stay
that's
out.
a trade, 100%. So remember, guys, there's right now the confluence between four things: the candle, the 10 EMA, RSI and MACD, you literally can make, and this is what I used to do when I was first trading. I used to write them down and look at the chart and check, 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 check. If all four are giving me that this is like, by good, I mean like it's enter worthy. It's at the bottom. They are at the trenches, because that's what good means when you're a trader. So good, like if I'm like, oh, this looks good, like no, it doesn't. Like, what are you talking about? This doesn't look good, but yes, it does. The candle gave me a nice wick. RSI is at the bottom, which means, risk versus reward is going to be better than entering up here, or especially up here. And MACD is on its way. Let's look at MACD right now, on its way. So you can see that MACD, once it gets to here, let me put it, and then this gets to here. So you can even draw. I'm a visual person, so I always draw when the targets have potential to hit. And it would be like, from here, it would be like Wednesday to Thursday, we're going to get the conversion of this, and essentially the transition into blue. Does that make sense? I like to draw. I draw on all my indicators, like exactly how I did here. And maybe I can do a segment even on like that for people that are more visual learners, because I'm a visual trader, and that helps me kind of predict. And I always leave spaces on my chart. A lot of people don't do this, so this is another pro tip. Always leave spaces on your, never look at your chart like this, because then how are you going to see the price action for over here? Does that make sense? Does that make sense, K2, or nah?
Oh, sorry. I realized I was muted. There was a dog barking out. That does make sense. Yes.
No worries. Yeah, so always leave some space. Doesn't matter how much space, but it doesn't matter really. You don't need too much data in the past. You really want the data in the future, so you can kind of guess where this move has potential to go. So always leave a little space in your chart. And I like to draw all my indicators because I know what they mean. But maybe that's another segment. But I think this was a dope killer session, bro.
Yeah, this is epic, dude. Thank you. Thanks for spending some time and teaching some of the fundamentals behind trading. And yeah, guys, listen, be sure to give a follow. If you're watching on the Cade Berkman account or the Wolfwood3 account, he should be tagged in the title. So just click his page and follow him. He goes live on video streams now a couple times a week. And he's also in a lot of our trading spaces called Market Talk. And we just talk about the market and we talk about the trades that we're getting in. And I'm just a big believer in the way I learned things is by sponging up around people who know more than me. I was able to get Bitcoined and orange pilled in a few months just by hanging out with people who understand Bitcoin to a level that I didn't. And now I understand why all these people are buying Bitcoin. And it's just one of those things like until, it's good. So anyways, yeah, definitely give them a follow. And like I said, at Wolfwood3, we're hosting spaces every single day on all topics in crypto and trading land. And hopefully we'll see a lot more traders into the ecosystem. We can have a bunch of fun spaces. So yeah, man, I really appreciate you coming on and teaching me some trading. I think this is going to be a cool segment each week.
Yeah, I think this is a unique, cool segment. And just want to go over what we'll do next week, maybe so that people can see. So next week, we're going to add on to our indicators. And we're going to add support and resistance lines. So support and resistance lines are, I don't even want to get into it. Support, resistance lines, and volume. See you next week.
Let's get it. Guys, thank you so much for being here. Give them a follow and what's it called? Repost the stream for us. And we'll see you all later, guys. We have a Bitcoin space in about 5 minutes. And we have a tech space a couple hours after that. And a gaming space a couple hours after that. So we have no shortage of spaces and content. We'll see you all later. Take care.
Cool. Later, guys.
And we